Nike's strategic fumble in recent years has put it under greater pressure from competition. It also cost the former CEO his job. What was that strategic fumble? I'll talk about it in this video. I'll also answer which one I think is the better stock to buy, Nike or Lululemon. I'll compare the two revenue prospects over recent years and looking ahead. I'll compare the two on operating margins and cash flow from operations. And finally, I'll compare their valuations, sharing with you my discounted cash flow models for both Nike and Lululemon, and looking at their forward price to earnings multiple, and then finally answering the question, which one I think is the better buy today. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, looking at these two over the past decade on revenue growth, they've both done a reasonable job expanding revenue, but in recent years, you can see Nike's revenue has flatlined and started to decrease at $49 billion. That's allowed Lululemon to close the gap here, and it generated $10 billion in revenue in the trailing 12 months. The strategic fumble I alluded to with Nike was the company's decision to stay away from wholesalers, or not stay away, to, let's say, reduce the inventory that they sell to wholesalers. Nike deprioritized wholesalers, and that didn't work as well as the previous management team thought it would. The reasoning behind the decision was that Nike's brand was very strong and they thought they can sell direct to consumers through the app, through the website, through its direct stores. And they thought, why should we sell to wholesalers and sell at lower prices, and our margins will be lower if we work with partners? Let's take all of the margin for ourselves. Well, that didn't work as intended. What ended up happening is the wholesale partners that Nike worked with now had available shelf space that was previously allocated to Nike products. And they partnered with other companies and they brought other companies' product on those shelves, and people went and bought those products that they saw at the stores instead of what Nike thought would happen. Nike thought customers would go to stores, they would see that Nike products are not there, and then they would go to the Nike website and buy on the Nike website. Instead, customers went to the store and they just bought what was available at the store. If it wasn't Nike, it might be Skechers, Adidas, Reebok, whatever the other product would be. Customers just ended up buying those, and that created more competitive pressure for Nike, and that really did not work out well. And as is usually the case when a CEO or a management team makes such a big strategic decision, if it works well, they're treated as heroes. If it doesn't work well, they get fired and they get shown the door, which is what happened with Nike's management team. Lululemon hasn't made a similar strategic fumble. They've continued growing, and their expensive products are resonating well with their customer base, and they're closing the gap against Nike. When we look at their operating profit margins, you can see Lululemon outperforming Nike here by a considerable margin, and Lululemon is going in the right direction, while Nike is still trying to stop the bleeding and turn things around. Lululemon's trailing 12-month operating profit margin rose to 23%, while Nike's trailing 12-month operating profit margin fell to 11%. So its margin is less than half that of Lululemon, and it's heading in the wrong direction, while Lululemon is heading in the right direction. When we look at the cash flow from operations comparison, we get a similar story, except for we see more volatility. Lululemon's operating cash flow rose to 22%, up from around 14% in 2015, while Nike's cash flow from operation has not been increasing. In fact, it fell to 12.5%. So over the previous decade, Nike's cash flow from operations fell from around 16 down to 12.5%. So now that we've looked at these two and their financial performance on revenue, cash flow, and profit, we can look at their valuations. When I did my discounted cash flow model for Lululemon stock around January 29th this year, 2025, I found its intrinsic value around $229. The current market price is $366. So my intrinsic value per share calculation for Lululemon has it lower than the current market price, which is a signal of overvaluation. But I also found a similar situation with Nike. The intrinsic value per share I calculated for Nike is $60 per share, and the current market price is $73 per share. So a similar overvaluation when I measured the two based on the discounted cash flow valuation model. I also look at valuation using other methods, and one of them is the forward price to earnings. And looking at this metric, Nike is trading at a forward PE of 30, while Lululemon is trading at a forward PE of 21.65. They've both been lower in terms of this metric going back 1 year. They're trading on the lower end of their valuation metrics. Investors are shying away from discretionary consumer companies like Nike and Lululemon as consumer budgets are getting stretched and the threats of tariffs raising consumer prices and forcing their budgets away from discretionary items even more. People also have been spending more money on services away from home, especially services, and less money on goods, things like clothing, electronics. These kinds of things have been under pressure in the last 2.5 years. And to start 2025, they've come under even greater pressure. And if there are tariffs and these tariffs are expanded, then companies like Nike and Lululemon, which have almost all of their manufacturing overseas outside of the United States, could face increasing pressure. Still, these are excellent companies with strong brand names trading at reasonable valuations. If I had to pick one of these two, I would pick Lululemon because of the difference in the forward PE valuation and the outperformance on the operating margin and the cash flow from operations. They were improving over recent years while Nike was moving in the wrong direction. So if I had to pick between these two, I would pick Lululemon as the better growth stock to buy today. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.